In this video, I want to explain to you why technical analysis might be preventing you from being profitable and why it's important to stop relying so much on candlestick data to make valid trading decisions, and why you should start relying on more order flow data such as a depth of market, such as a footprint chart, or even such as a heat map. I have no problem using a candlestick chart to tell me where price is currently trading or where it was a few minutes ago. But I have a problem with using a candlestick chart strictly to give me a valid reason why I should buy or why I should sell. And I see a lot of people not putting a lot of emphasis on what's going on behind the scenes via order flow and putting a lot of emphasis on the candlestick data, which for me personally, especially since I am a day trader and a short-term scalper, candlesticks alone do not give me enough data or enough valid information to put a trade on. What I mean by this is candlestick data does not tell us what's going on behind the scenes or behind the candles. It's almost like going out with a girl that wears a lot of makeup, and as soon as she takes that makeup off, she might not look as good as you thought she did. And with the stock market, we might see prices going up, prices going down, but we don't know what's causing the market to come up or causing it to come down, whereas tools like Orderflow will give us the true story with volume and price that's telling us what's going on behind the candle data. To validate my point even further, why should we take the market long based off of this chart that I'm showing you right now at my yellow oval? Comment in the comments below what you see based off this chart and the picture you're seeing at this moment that's telling us the market is going to move higher. Based off of a candlestick chart, I do not see much. However, if we were going to look at the order flow, and what you're going to see on my charts, just a very brief introduction, is a depth of market to the right, which will show us a volume profile. It will show us a level 2 data. It will show us recent bid versus ask trades. And I also have a delta pulled up here on the right, which is a depth of market. Now you're going to see the same information you see on a depth of market over here to the left, which is a heat map, which shows us historic level 2 data combined with completed transactions, and then a volume profile to the right. And then also what you're going to see here is a delta footprint chart. And all these things are going to show you the same information, just visually they are going to be different. So no matter what tool you use, there's no better tool. It depends on how you want to see it and what you want to see. This is a footprint chart. This is a heat map. And this is a depth of market. Again, it will show us the same information, just visually differently. Now, what we're going to see on a candlestick chart is a random sell-off to the downside. And at my yellow oval, around 45.90, 45.89, if we were to pull up a delta footprint chart, we're going to see a lot of clues. Whereas on a candlestick chart, we're really not going to see much down there. So pulling up this delta footprint chart, and just briefly, what a delta means is ask volume minus bid volume. So if you have a negative delta, that tells me there are more aggressive trades which hit the bid than there were aggressive trades which hit the ask. So if you see a negative delta at a specific price, that's telling me there is very large and aggressive selling outweighing all the aggressive buying at that level. So zooming in on this footprint chart where I'm hovering my cursor over right now, we're going to see a negative 45.56 lot delta around 45.89. Now what that tells me is as the market was selling off, there was a very large negative delta of aggressive selling at that price. If the market sells off and we see all this negative delta or all this aggressive selling and sellers hitting the bid so aggressively, but there's no downside follow through, and then on top of this, we see aggressive buying thereafter, that's a very good signal that the market is going to give up downside prices and attract the price higher, and the market can bounce and rally thereafter. Looking at it on a depth of market, what we're going to see at 45.89 is a negative 4,600 lot delta at that price where I'm hovering my cursor over. What that tells me is 1,300 lots hit the offer, but only 6,000 hit the bid. So 1,300 minus 6,000 will give us minus 4,600 lot negative delta. Looking at a heat map over here, we're going to see a very large red bubble. And again, it's going to show us the same information, just differently visually. As the market sold off, we're going to see a very large amount of volume hitting the bid at 45.89. We could also see that from a volume profile. The reaction thereafter was the market rallied off of that level despite all that aggressive selling. Aggressive buyers stepped in, and you would have been able to capitalize on a nice little day trade on a scalping rally higher, and you could have got 15, 20 points off of that move. I also posted some short clips last week on my Instagram based off of Orderflow. I'll post a link for my Instagram in the description below at Investortrade. This is my only account. It's a good resource. You're missing out if you're not following it. I post like these daily trading recaps, and I post really good trading tips and tricks that I guarantee you're not going to find anywhere else. Again, the link is in the description below. It's a good resource. You're missing out if you don't follow it. But I posted such clips going over this order flow analysis on there. But looking at a candlestick chart, what is really telling us to get in at that oval where we spotted this activity at 45.89? Now, if we were to go to a 15-minute chart, and this is why the candlestick data, in my opinion, for you to enter does not give enough information. A lot of traders will wait for a candle to close, or they'll wait for the market to move up. And by the time that happens, you're going to miss the move. Whereas you can get in at the lower oval when you spot such activity on, let's just call it a footprint chart, or on the depth of market. When you see that, you enter because it's giving you real-time information of what's going on behind the candle scene via price and volume order flow. And it's so powerful, especially if you're a short-term trader. On July 20th, which was a Thursday, the market on the S&P 500 opens up and we get a strong rally directly out the gate where we start moving higher and higher. Now, the problem with candlestick data is it doesn't differentiate between opportunities. It just treats price equally regardless of where we are currently at. So what I mean by this is as the market rallied, if you were going over the order flow, you would have spotted that this rally was not as strong as you thought, and it would have been a red flag to get long and a green flag to possibly get short. What I mean by this is pulling up the footprint chart is as the market begins to rally higher, you're going to see a lot of selling activity step in, meaning blue represents aggressive buying, red represents aggressive selling. As the market moves higher and start moving lower on those bars, aggressive sellers step in here. Market moves up, aggressive sellers step in here. Market moves up, now we start to see more aggressive selling. We come up, aggressive selling steps in, and then eventually the market breaks that uptrend and aggressive selling then steps in thereafter, and that would have been a good indication to get short, whereas the selling on the rally higher would have been a good indication to not get long. To validate this point even further, we're going to pull up this chart, which on the bottom, you're going to see a delta, but cumulatively. So as the market rallied right here on this strong green or blue bar up, the delta was putting in lower lows and lower highs, while the market was putting in higher highs and higher lows. What this tells me is as the market was rallying higher, there was a strong amount of aggressive selling as the market was gravitating higher. Now, regular candlestick data is not going to put an emphasis on this because it's going to make price or candles equal regardless of the volume that's getting transacted behind the scenes. But if we were to look at like a delta, you're going to see it's putting in lower lows and lower highs down here while the market was rallying, putting in higher highs and higher lows. In this context in itself would have not been valid to get long and would have been a green flag to look for shorts. Pulling up Bookmap, you could validate this point even further because you're going to see the market rally. And as we come up, you're going to see a large aggressive sell or red prints come through the market as we start moving higher. And you can see the delta down here was in fact downtrending as the market was uptrending. And then as soon as the selling pressure stepped in, would have been a valid thesis for you to take the market short, putting your stop loss wherever you're comfortable with your risk and targeting the nearest support or demand level, because from that area, we had a very, very large sell-off. In fact, we sold off directly into this demand zone and found a very nice rally and an uptrending move back into that. And also to validate this, the cherry on top was from the previous example where we spotted that large buyer or seller the other day at 4589. That's exactly where the market kind of stalled out at and failed to find acceptance above that. We rejected it earlier in the morning, and then later in the day after we bounced off demand, it rejected that same exact level where we spotted that large negative 4600 delta, rejected that well, and could have capitalized on a downside sell-off from that move as well. And also, a normal candlestick chart doesn't really tell you why price is moving up. Is it a lack of offers? Is price moving down because there's a lack of bids? Is price moving up to advertise price to sellers at a higher price? Is the market moving lower to advertise price to buyers who are looking to buy lower? What is going on behind the scenes? And again, a candlestick chart really doesn't tell you this. So looking at this chart, and again, these levels are planned before the market is even open. I send pre-market plans out every single day in my Discord of levels I'm looking out for and potential trading scenarios. So the scenario on the 21st of July, which was a Friday, we were watching 4583, 4593 for sellers to step in to play short, targeting 4565, which is this bottom green line, and the pink supply box is that 4583 level. We've rejected this level multiple times today so far. We put in a high over here. We also put in a high over here. Looking at a footprint chart, we could see that high here. We could see the previous high here. And then eventually we break this high over here. Now, if we were to look at this chart and not show you the reaction after the fact, this chart just broke the high. We're putting in higher highs. We're putting in higher lows. We just bounced off of this previous area over here. We're starting to see volume step in and the market start uptrending. This chart looks bullish. But again, behind the scenes, this chart was not bullish and gave you a valid opportunity to take the market short when many are getting long. And that's the beautiful thing with order flow is you can really know what's going on, so you really don't get faked out as much if you rely solely and strictly on candlestick data. Now, what's going to happen here is on this high day breakout, you're going to see a lot of buying activity. Pulling up the footprint, and I'm going to zoom into when we broke that high right here at 4583. You're going to see a positive delta of plus 1300, plus 700, plus 400, plus 500. There's just tons of aggressive buying at this level. And if we would even look at a depth of market, if I were to go up to the high, you're going to see a very lack of volume above 4583. So a lack of volume tells me there's a lack of activity or a lack of interest at that level. If the market wanted to break out, you'd see more interest, more volume, and more acceptance. That's telling me the market's rejecting this level, and this is a good opportunity to get short. Even though we're seeing all this buying, it's a good opportunity to get short. And then even pulling up the book map here, you're going to see all this aggressive green buying at the high of day above 4583. Remember, inside that supply zone, and there's no follow through. The market sells off with that aggressive selling. An offer then steps in thereafter, and you would have been able to capitalize on a nice sell-off directly into our 4565 target, just simply putting yourself in the position of understanding the flows of orders. And this member in Investortrade, about a $420 profit after studying the order flow videos, significant improvement with his trading, solid week trading supply demand, reading the tape, about a 66% win rate, and a profit factor of 7.5%. That's a very high number. Last 3 months, 2 years of inconsistency. If you put the work in and study the market every single day, you will set yourself up. And if you follow the process, you will see a difference in your trading. Believe me, do not focus on the results. Do not focus on the money. Focus on the process, because those will be a byproduct if you look to improve every single day and watch the market and get better and better. If you guys want to see more videos like this, drop a like on this video so I could get feedback on it if you like this type of style content. I also just added a full new section to the A to Z course about order flow, about 13 new videos, over 5 hours of lessons, going over order flow, the best platforms, the best tools, live trading examples, and other setups and scenarios that I do look out for. The link for that will be in the description below. But comment if you have any questions. But I'm going to end it on that note. Hope you all enjoyed. Peace.